Hello guys, welcome back to the channel. So in this video I'll be going through the pairs that will be on my watch list for the first half of this coming week. So the first pair is US dollar against the Japanese yen. We'll start on the daily time frame. On the daily time frame you can see that there's a double top area which I've marked with this red line up here. And then we can see that the market is forming a structure while it's forming a pattern, a reversal pattern, a continuation pattern while heading back to that double top area. If we go down to the 4 hour time frame, we can see that the market is forming a pattern inside a pattern which is a reversal pattern, and it has already been touched the first time, the second time, and I'll be waiting for the market to reach to these areas for the third touch. If it gets to these areas correctively, I will enter with a risk entry. If it gets to these areas impulsively, I'll wait for the market on the 1 hour time frame to impulse down. I'll wait for the market to impulse down and then give me a correction, and then I'll enter on the break of that first correction. So that's our first pair. We'll go to the second pair. The second pair on my watch list is Euro against the Japanese yen. If we go up to the daily time frame, we see that there is a double top area up here, and the market is also still moving in form of a reversal structure which has been touched by the market the first time, the second time, and the market is heading to the double top area in form of a reversal structure which has also been touched two times previously, first touch, second touch. And with this also I'll be waiting for the market to reach to this double top area. If it gets there correctively, I'll enter with a risk entry. If it gets there impulsively, I'll wait for the market to impulse down and give me a correction, and then I'll enter on the break of that first correction. The next pair is New Zealand dollar against the Japanese yen. New Zealand dollar against the Japanese yen, you can see that it's forming a reversal structure which has been touched three times previously, and the market got to this double top area which I had marked here impulsively, and it's forming a structure inside a structure which is a reversal pattern. So I'm waiting for the market for this first half of this coming week. If it gets here, it's already impulsing up to those areas, so I'll wait for the market to impulse down, and then if it gives me the first correction after the impulse down, I'll enter on the break of that first correction. The next pair is Swiss franc against the Japanese yen. On the weekly time frame, you can see this pattern right here which I have marked with the red trend lines. It had been touched first time, second time, and there is a double top area up here which I've marked with this red line. The market is approaching that double top area. It has already gotten there. On the daily time frame, you can see that it got there impulsively. So with this, I'll just wait on the 1 hour time frame. I'll wait for the market to get to the that touch and then impulse down and then give me a convincing correction, and then I'll enter on the break of that correction. And the next pair is Euro against the Australian dollar. We'll go to the daily time frame. You can see Euro against the Australian dollar. It reversed from these tops here in form of a rising wedge. It reversed from up here. It broke up and then impulsed down, and it gave us the first bigger correction, and then it impulsed down again. If we go down to the 1 hour time frame, we can see it's forming some sort of a continuation pattern which is a expanding triangle. So I'll be waiting for the market to come back to these areas up here for the that touch. If it gets there impulsively, I'll go down to the 15 minutes time frame and wait for the impulse down and the first correction. If it gets there in form of a reversal structure or correctively, I'll enter with a risk entry. So the next pair, it's Australian dollar. This one we talked about it last year. Australian dollar against the New Zealand dollar. On the daily time frame, you can see that it reversed from up here, it impulsed down, and this to me looks like a bigger continuation structure which has been touched the first time, second touch. And now the market is heading to this double top area which I've marked here. If the market gets to this double top area correctively in form of a reversal structure, I will enter with a risk entry. But if it impulses down, it might also impulse up and get to these areas before impulsing down. And for this, I'll wait for the market to just impulse down and give me the first continuation or the first correction, and then I'll enter after the break of that first correction. The next pair is Great Britain pound against the New Zealand dollar. If you go to the weekly time frame, you can see that it is forming an expanding triangle which had been touched by the market the first time, second time, and here there's a double top area up here. If you go down to the daily time frame, you can see the market headed to the double top area in form of a expanding triangle, and it got there. It didn't get to the third touch, and it started correcting down. And with this, it's forming some sort of a expanding triangle. So I'll wait for the market to give me a convincing structure. If it comes back down to this trend line and then go back up correctively, I'll enter with a risk entry. If it goes up impulsively, I'll just wait for the impulse down and the first correction, and then I'll enter on the break of the first correction. If it doesn't do that and decide to go up, I'll just wait for another trade on another pair. And these are trades that have been on since last week. The week before last week, you can see that the market was coming down in form of a continuation structure, and it impulsed down out of that structure and then impulsed back in, and it gave us a first continuation. I entered on the break of this first continuation. The market impulsed up and it got to around 4 point something percent. After it got there, I took partial profits because it started correcting down. First, I thought it was going to continue going back up after the on the break of this correction right here, but it started coming back down again. That's when I took some partial profits. So this I'm still holding. I had some trades open. I have some trades still open in this trade. If it comes down, it will take me out on break even. If it continues going back up, I'll continue locking some more profits. So guys, has been our video for today. I'll try and upload another video on Wednesday or Thursday. Please like, subscribe, and share these videos. Thank you for watching.